Hi, everyone. It's Joe Veneri, the host of Fitt Insider, the show where I talk with the entrepreneurs, executives, and investors who are redefining the business of fitness and wellness. Today, I'm joined by Soraya Darabi. Soraya is the co-founder and managing partner of Trail Mix Ventures. In today's episode, I talk with Soraya about investing in the future of living well, her take on the current state of the wellness industry, and her advice for founders looking to start a company in the space. I had a great time chatting with Soraya, and I hope you enjoyed listening. Let's get into it. Hi, Soraya. Welcome to Fitt Insider. Thanks for joining us.
Thanks for having me, Joe.
I'm so excited to chat today and hear more about your experience. And I think to kick things off, it would be helpful for you to tell the audience just more about Trail Mix Ventures, your experience in venture capital, and kind of what you're into day to day now.
My pleasure. So 4 years ago, my partner Marina and I began Trail Mix Ventures. It is a early stage fund, and we focus primarily on what we call the future of living well. That encompasses three very large addressable markets. First and foremost, wellness, which you're very familiar with, Joe, $4.2 trillion industry according to CB Insights. We also focus on primary care and the care economy, which is massive, but let's say conservatively $7 trillion. And that encompasses within it everything from pet care to child care, elder care, personal care, including healthcare, the biggest of the markets. And then last but not least, we invest in the future of work as it pertains to well-being at work. So again, massive market. And when we find companies that touch one, two, or all three of these different verticals, we become very excited because we've built at Trail Mix a nice platform for founders who care not only about building the next big billion unicorn, $1 billion startup, but we look for founders who are inherently purpose-driven and also think about, the future of our well-being as it pertains to the next 20, 30 years and how they can build long-lasting brands that are sustainable and again, focused on what we think really matters.
Yeah, and obviously, as you mentioned, I think that's an incredible focus and thesis. And the wellness industry and well-being and living well is so expansive and only growing. And you touched on a few of the different categories there, and certainly the way that you define it or look at it at Trail Mix. But is there any bounds to wellness or well-being? Where do you draw the line between maybe a company, an investment, an entrepreneur you would look at versus where it starts to get blurry?
Sure. So for Fund One, as I mentioned, we cared predominantly about those three categories, and we became particularly intrigued when a company would touch more than one vertical at once. So case in point, we're very proud to be early investors in The Wing, which we think focuses on well-being at work. It addresses the 1099 economy, which between 2014 and 2024 is quadrupling according to census data. And as of today, actually, this article just came out in the Wall Street Journal. Women now have overtaken men as the majority of the U.S. workforce. That includes W-2 and 1099 economy. And so, when we met The Wing, for me as an angel 5 years ago, and then Trail Mix as a fund decided to invest in the Series A, we were intrigued by their notion of, looking at these two burgeoning markets, women in the workforce deserving their own workplace that caters to their needs, and also freelance economy. And we decided that was really addressing the care economy and well-being at work. And so that's an example of a company that we'd absolutely invest in again and again. Similarly, but very differently, we invested in Henry the Dentist, which is not necessarily reinventing dentistry, but it was started by a Harvard Business School alum with a background in sales and his now wife who worked at Dry Bar, who thought, how can we dry bar dentistry? How can we make going to the dentist more fun, more efficient, and potentially enjoyable? And so they built an enterprise company. In this case, Henry the Dentist is not necessarily just consumer, it's B2B2C, and it addresses well-being at work. So they work specifically with mostly Fortune 500s who are aligned with dental insurance providers that want this as an employee perk for their customers being those Fortune 500s. And the heads of HR, or the heads of people at the Fortune 500s want this employee perk to make their employees happier and healthier. And both of them are incentivized to reduce the cost of future dental care work, which can be quite costly, focusing on what we really believe in at Trail Mix, which is preventative medicine. And then, of course, last but not least, the consumers like it because if you're going to go to the dentist, it might as well be on your lunch hour. It might as well be free. And you should sit in a massage chair with Bose noise canceling headphones watching Netflix as your dentist, who's very jolly and very educated, gives you premium healthcare access, but in an incredibly efficient manner. And so those are two incredibly different concepts, but both of them we think are uniquely trail mix. Now, what would we not invest in? I think the term wellness needs a makeover because we are over indexed and bombarded with pitches for, and by the way, these could be very venture backable concepts, but for milk alternative D2C companies. We are bombarded with companies that are trying to reinvent chia seeds and the health benefits as such. We like food. We will ultimately make 10% of each portfolio some innovation within food. I can talk to you about one in Fund One called Misfit. But for the most part, we are looking for platforms that have drag along revenue in the form of vertical businesses that can emerge once the platform hits scale. And so we're not super interested in trail mix at something that can be very meaningful for a founder, raising small amounts of capital and having a $50 million exit. There are plenty of angel investors in the world who are great at that and deserve to make a lot of money investing in those causes which they themselves are consumers of. Trail mix is a little bit more audacious. We prefer founders who are taking Mars shots over moon shots and who have the perseverance to make something as demonstrably large as it could be, but not at the expense of integrity, not at the expense of the core values in which we all believe. So, uniquely, those are the categories that Trail Mix invests in. Now, more importantly to us, we have a profile for the founders that we invest in.
Yeah, and real quick, if I could just jump in there, I think there was potentially a lot to unpack, and I want to circle back to the founders and how you identify them and what you're looking for. But when you start to think about, you're talking about investing in platforms, investing in companies that are transforming the experience. Certainly, a few of them that come to mind, Parsley Health and Kind Body, that are remaking the kind of doctor's office experience from the Parsley Health perspective, and fertility from the Kind Body perspective. When you start to look at transforming those verticals within, in this case, healthcare, and when you start to, make progress towards those founders and those investments, can you give us some insights on how those conversations started specifically and how those investments came to be?
Absolutely. Well, you're touching upon two of my favorite founders in the industry, Gina and Robin, both of whom I've spoken to in the last 24 hours. How did they come to be? Look, I think if you're an investor, you have a bunch of different ways in which you can source deal flow. You can make it incredibly mathematic and quant focused. You can be index ventures where you hire a lot of juniors to get on the phone all day and call up everyone that they add on LinkedIn, which, by the way, is a very effective strategy. I'm not putting it down. And say, hey, are you raising soon, to get into a good deal? But everything comes down to a sort of a mathematic equation as to whether or not a company is worth backing. At Trail Mix, we're not quant focused, but we also believe early stage venture has a high level of relationships involved. And there's a lot to be said for intuition as to what's coming around the bend. And certainly it doesn't hurt that 2 of the 3 investment committee members of Trail Mix Ventures are women. And so looking at Parsley Health and Kind Body, the unique similarity between the two is that their core consumers are women focused on women's health. So how did we find the deals or think about this? Well, honestly, I won't bore you, but it all begins with my childhood. My mother taught public health at Columbia University. So I was raised by an academic who cares a lot about women's health. My great aunt was the first woman on the board of the Guttmacher Institute, which is the biggest reproductive health think tank. And my sister spent the majority of her career at Planned Parenthood. And so I was inundated as a child all throughout my life up until now with statistics about how terribly underfunded women's health is and what necessary changes must take place in order for women who go to the doctors far more than men need to have in order for society to hit some sort of healthcare parity. So that was kind of like the unconscious bias in my mind well before I ever met Dr. Robin Berzin, who's phenomenal. I met her at a dinner party when we were 23 years old. And then eventually we became friends. After that, she became my doctor. We bartered advice, quid pro quo style. So I gave her advice before she launched Parsley officially on how to raise capital from institutional investors. And how I would, if I were in her shoes, form a cap table. And in return, for about a year, she gave me free medical advice. I have Hashimoto's, which a lot of women have, and she was phenomenal in helping me figure out the right food as medicine equation. And of course, that sold me on Parsley and sold my team on Parsley because I was just raving about the experience I had with Dr. Berzin. And when it came time for her to raise capital for her seed round, her Series A round, and her Series B round, of which Trail Mix participated in all three, that close-knit relationship allowed us to become one of her larger shareholders, of which we are so proud to be. That's Parsley Health. It's really hard to replicate that in terms of how do you get into a deal, because I'm 36 now, so we're talking about 13 years of cultivating a particular relationship. But we believe that this is a marathon-based industry. And so I wouldn't be surprised if you and I were to loop up again in 2 years and I told you a similar story about a different company. As long as you give more than you take, in the words of our advisor Adam Grant, in this industry, good opportunities should come back to you in fold. That's Parsley. For Kindbody, I met Gina Bartazzi at a women angel investors event. She used to be the CEO of Progeny, which is now a publicly traded company. And I was fascinated by her story. So Gina, through IVF, had her twins. She's very open about this. And in groups for women investors, a lot of us were alpha types. She would publicly advocate for, fertility and preservation and egg freezing. And I had never heard anyone speak so openly about this. This was just 5 years ago. Now in the zeitgeist, you hear people talking about it all the time. So I was really impressed, not necessarily on a personal level, although I have gone through it myself and recommend it highly, but more so from a business standpoint. Could this really be as big as she says? And so I started calling up folks who are subject matter experts just out of curiosity. My first phone call 4 years ago was a guy with a company called Fertility IQ. His name is Doug. He used to work at Sequoia. And he told me about the industry and how big it's becoming. And then we interviewed a woman named Constance Rapson, who is an investor in our fund. And she's this chief marketing officer of CCRM, America's largest fertility bank. And she began to explain how large this market is. And with those data points in mind, 2 years ago, we set an intention as a fund to find the best fertility company to back in the US. And I'm not saying we had the ability to get into all of these companies. We met with Carrot, we met with Modern. I'm sure they would have gone with the same investors they now have on their cap table. Those companies were founded by extraordinary women. But we landed on Kindbody because of our belief in Gina, first and foremost, having been a CEO of a company that scaled tremendously in this space. And also because she had, in our opinion, the right logical approach to an egg preservation business, which is first and foremost, the cost has to be reduced. If the average egg freezing cycle costs a woman $12,000 with insurance in mind in the US, how do you Warby Parker it? How do you reduce the friction in the supply chain, or in this case, overhead for medical costs, to dramatically decrease the price, but not at the cost of service? And she did exactly that. She can offer 3 cycles now for $12K as opposed to 1 cycle for $12K. And even though that's still cost prohibitive for a lot of American women or American couples, it's certainly better than the alternative. So for us at Trail Mix, we looked at about 30 different fertility startups before finding the one that we just felt made the most intuitive sense. But again, relationships played a large factor in our ability to become investors.
Absolutely. That's the point that stood out for me. Relationships, playing the long game in terms of, as you mentioned, giving more than you take, and serendipity. What are the chances that you were able to connect with Robin, and then over that time you had that relationship that developed and turned into that investment and multiple investments at this point. So often the question comes up, from early stage founders that are saying, how do I get on somebody's radar? And really it's the relationship piece of it. It's the persistence and the outreach. How welcoming or non-welcoming are you to kind of the cold outreach and, soliciting the first meeting and just, serendipitously reaching out?
I'm very comfortable, as are the members of our team. I met you through our associate, Molly. I think she cold outreached to you. And it's one of the reasons why we treasure her, because she has so much gumption. I began my career as a journalist. I used to work for Condé Nast. I worked for the Washington Post as an intern. I worked for the New York Times for 3 years. You have to get over shyness pretty quickly in media if you want to be good at your job. I give myself some credit for sending a cold email in 2006 to Jack Dorsey and Evan Biz of Twitter saying, "Hi, I'm Soraya. I work for the New York Times. We'd love to beta test your product." Of which Jack wrote back less than a minute later, "Let's talk." And then, a lot of people ask, "How did you get so many Twitter followers, Soraya?" They didn't let me know, but they threw my name in the suggested user list
Right.
about a week later. And that's how that happened. So in life, good things happen to those who take risk. And I believe there are a lot of similarities between journalism and venture. You have to have an inherent sense of curiosity, and you have to have gumption. That email that I sent back at the Times days, that involved gumption, and certainly what Molly's doing, finding great experts like yourself, subject matter experts in well-being, involves a bit of risk.
Absolutely. I think that's a point that's well taken among entrepreneurs who have that kind of any means necessary attitude. And sometimes you see whether it's an individual or investment fund kind of taking the double opt-in, warm introduction only, find somebody who's a founder that knows us to get to us. And then there's the folks who say, please email me and put it in their Twitter bio. So it's just two different, pieces of advice for founders. And speaking of advice, building on that point, is there any advice that you would give a smart, driven entrepreneur in the wellness space or the living well space for building their company? What advice would you give them, and maybe what advice should they ignore?
How much time do you have?
Yeah, right.
Okay. I will tell you that I had breakfast this morning, and she's in stealth mode, so I won't mention her company, but I had breakfast this morning with a woman who I thought had a phenomenal idea for a startup. One of those meetings where you're just like, why hasn't anyone done this yet? And to her credit, I thought she did a really good job of explicitly stating at the start of the meeting that she didn't have the agenda of raising capital, which sometimes investors, we can turn a light switch on and off when we think somebody needs something from us. But if it's conversation and it's not them asking explicitly for any one thing from a meeting, but really they're saying, look, I'm taking this time because I really want to get this concept on your radar and hear your honest feedback. Like, should I do this or not? That can be very, very effective in building a long-term relationship with a VC, if your end goal ultimately will be to raise venture. But I thought she was authentic when she said, I'm not sure if I'm going to raise capital. I just want to run this idea by you. Have you heard this 10 times already? That's one. So, in banking, they call that KYC, know your customer, do your diligence on whom you're, receiving capital from or pitching. I'd say it's pretty similar. Let's just call it know your customer as a founder, whether you're meeting with a VC or a fellow founder. I often say it's okay to share your idea with many. If it's a complicated idea to execute on and you think you can execute on it best, which you should if you're putting all on the line, then don't worry so much about other people stealing your idea and running with it, because that won't be genuine and it'll be hard for them to pull off. But if you share your idea with a bunch of folks that you think are smart and simply ask for feedback, you'd be surprised at how much they're willing to give you in return. So that's my first piece of advice. My second piece of advice is that not all businesses are meant to be venture backable. And this is certainly something I did not understand when I first set out to be a founder. So I don't expect everyone to just hear me say this and be like, okay. But a lot of businesses are really great ideas, and I hate the word lifestyle, so I'll never use it, are really great ideas to add to a portfolio career. And if you'd like to make a lot of capital in the short term doing something you love, then consider making it a side hustle to start. Maybe you're consulting and you have a passion for a wellness focused startup, and you can begin by doing it on nights and weekends. Or maybe you'd like to sell something online, and you can begin by starting a Shopify page, doing a basic SEO optimization, and then asking folks if this is something that they'd want and seeing who inherently like finds you online organically. I often tell folks that we see too many business plans that are half baked at best, that are businesses that really shouldn't ask for venture capital. So I worry that they're going to get it because it can put you in a really dangerous position to receive a lot of capital for an idea that has a shorter time horizon. And then that puts unnecessary pressure on the founders to scale at a speed that they're not going to be able to. Moreover, diluting yourself on a cap table is never something to be celebrated. So every time you see folks on Twitter being like, just raised 2 million and all these folks are writing back, hooray, I often say that's not necessarily something to congratulate somebody on. Yes, it means a valuation or a higher valuation on paper, but it also means higher expectations to live up to. Now, if you're a founder that has validated your proof of concept, has created a beta, has perfected your business plan, and you have a wellness or well-being focused startup that absolutely deserves venture, then the best thing that you can do is write a thoughtful email to the people that you'd like to work for you in the future, advise you, or invest in you. And don't bombard them with the kind of email that they'll receive 10 times a day. Cite certain investments they've made or certain companies they've worked on that feel analogous to what you're building. Keep the email short but thoughtful. And then make sure to put in there that you're going to follow up, not next week, but in a month's time if you don't hear from them. And I always give things a rule of 3. If you've written to someone twice and they haven't written back or haven't given you the feedback you want, persevere and try one more time, because just through that dedication, you might get exactly what you want. So I'll stop right there. But those are my first few bits of feedback.
No, I think that's really incredible. And I didn't interrupt or jump in intentionally because it's basically a step-by-step guide for those early stage founders, and not even specific to wellness, but in general, for how they should approach this. And I think it's something that we're starting to see now change in the perception of startups is the difference between, hey, I took something, I bootstrapped it, I validated it, I'm growing it, it's scaling, and now venture capitalists are reaching out to me, investors are reaching out to me because they want to invest, and I'm basically turning them down. That is starting to get a lot more praise than we just raised X amount of dollars, and frankly, we're not even quite sure what to do with it, but we have it.
Awesome. I mean, that's a different data point. And that's because of 2 things, really. One, to the credit of the founders, it's because they've built something that people want. And I often say that business plans have their own product market fit.
Mm-hmm.
You put together a business plan and you've sent it to 10 investors and none of them are really showing a lot of enthusiasm. It could be that your business plan doesn't have product market fit with what those VCs want. And so it's really important to study up on the investors to whom you're pitching, make sure they don't have anything in conflict in their existing portfolios, and making sure the company that you're pitching, the idea you have, is timely. Like right now, I wouldn't dissuade people from starting a D2C company. I wouldn't tell people not to start an advertising revenue generated business, but I will absolutely say with certainty it's harder to raise venture for those businesses for a lot of reasons, simply because of market conditions. But in 2012, if you were Warby Parker or Casper, you were living the high life. There was never a better time. So it's really important to study market conditions and to make sure that your deck and your story have product market fit. And then in terms of, the founders who get to give VCs the big FU if they want to, because nobody paid attention and then they had a glow up, I'm all about it. I love that. I still think of myself as a founder versus a VC. And that makes me really happy. But I also think it's because America is oversaturated right now with seed financing.
Sure.
And so there's never been a better time to be an early stage founder because the capital's out there and capital's a commodity to be sure. So 2 things on that point. 1, make sure the VCs that are giving you money have subject matter expertise in something that you need. Don't just take money because it's there or because it's the best valuation. Make sure you're partnering with someone for the next 10 years. That's how long you'll be in business with them. And then 2, make sure that those investors have the capacity to follow on and would want to. because there's nothing worse than the negative signaling of a VC not following on to future rounds or not being able to help you raise future institutional capital. So maybe we're getting in the weeds with my world, which is now finance, but I really think that's important for founders in general to know and hear.
It's valuable nonetheless, and I think a lot of times with founders who are really working on their idea and they're passionately trying to scale this thing and make it work, they don't necessarily know the ins and outs of the game itself. And so I think a lot of the things that we've touched on are getting into the weeds is good to understand. You can only win the game if you know the rules, and understanding those various things that we touched on, I'm sure will add a ton of value. And,
Mhm.
and building on them, especially kind of the market conditions piece and the timing. And one thing you mentioned earlier, which was the idea of the word wellness needing a makeover. If you think about the current state, obviously with Fitt Insider, we talk about fitness and wellness, but just the landscape in the broadest sense of the word, from connected equipment to, you've mentioned the D2C wellness products, celebrity-backed trends. So many of these things dominate the conversation.
Right.
Do you have what's your opinion on what's working and what's not working in terms of serving not only users, but the types of companies we're seeing being founded, and what's next?
Ooh, I love it. That's a great three-part question. Okay. So I agree with you that wellness right now is synonymous with some of the more public or mainstream companies that are quite polarizing in some ways because they make good fodder for clickbait. So maybe it's a Hollywood celebrity who advocates for wellness publicly, and certainly the world has a love-hate relationship with said celebrity. But when you think of wellness, often said celebrity comes to mind. And by the way, that can help the industry grow because of free earned media for the space in general. But it can also hurt wellness startups if they're immediately thought of as pseudoscience. So when I say wellness needs a makeover, we prefer to use the language "the future of living well," because we think that focuses on, not just the superficial kind of cosmetic elements of wellness, but rather how do we live happier, healthier lives? And that can be in work, play, and that can be in care. So part of the marketing challenge for the industry is not making the definition, multiple mouthfuls. Now, so where do we see future opportunities headed? We're really keenly interested now in telehealth as it pertains to addiction. I think you'll see trail mix making some investments in the addiction space. If you look at, for instance, opiate addiction alone, it's now at the point in America where the average American knows two people who are addicted to a substance. And most likely one of those substances are painkillers. It's really tragic. And so it's not that we're trying to capitalize on a travesty, but rather we think sometimes for-profits can be as effective, if not more effective, than nonprofits in solving particular epidemics. Certainly we're seeing that with climate change. So we're interested there. We're interested in AI in healthcare, of course, not just because it's a buzzword, but because there's so much data to compress in society. And the right minds can literally cure cancer if they're put in the same room at the right moment in history. We're interested in robotics in healthcare as well, not just the classic, can a robot perform a thyroidectomy better than a doctor? Can a computer be a better radiologist than a radiologist? But actually, robotics and VR can be great complements to senior surgeons and senior healthcare professionals. They can be additive in the surgery room. And we're excited to see statistics go up and to the right in terms of success from said surgeries because of complementary hardware or technology. We are particularly interested in food as medicine, as you well know, Joe. And you saw that in our investments in Misfit Foods. You saw that in our investment in Parsley Health. You'll continue to see Trail Mix keenly interested in this arena. It's so massive. Beyond Meat is just scratching the surface of what's possible. I could go on and tell you what we're fascinated by. I don't want to bore you.
No, not bored at all. I'm riveted actually, and that's, I think, part of it. As you're mentioning these different topics, and I'm thinking through things that came up, we recently published the 2020 outlook from Fitt Insider, and addiction was certainly something that came up in terms of that trending towards a wellness, healthcare, alternative healthcare, in the same way that we've seen and are starting to see more of with mental health. And one of the other areas developing there, I know you have some investments in the cannabis space, psychedelics as potentially a cure to addiction, depression, not a cure, a treatment, I should say. Is there any thought towards that path and continuing to invest in those alternative healthcare options?
So singular, we have an investment in a media company that is makes money also through affiliate revenue in selling things like vapes and paraphernalia that enables hobbyists to enjoy their plant. And I'm not a hobbyist, but I just thought this was a burgeoning market and a really interesting company based in Canada that we should explore an investment into. But we have institutional investors now at Trail Mix. And so we're prohibited, for better or worse, in actually investing in the future in anything that touches the plant or CBD at large. Do I think this will be a missed opportunity for the fund? Sure. I mean, it's going to be huge. But I also think it's a saturated space already, and every other entrepreneur I meet has a CBD infused something.
Definitely.
And how much CBD do we need in our lives?
Right.
So, and by the way, I just bought a CBD chewable for my dog because he has terrible anxiety in thunderstorms. So it's not as if I'm not a consumer in some capacity. I just think that maybe we're getting ahead of ourselves in thinking spraying and praying is the right solution for, herbal remedies. But it doesn't mean I'm a non-believer. So I'm excited to watch the space just because I'm curious and open-minded. But for Trail Mix, for better or worse, we are beholden to our bosses, and my bosses are our investors, and they want us to be investing more traditionally down the road.
And to that point, and kind of just thinking about the wellness space in general, you kind of touched on this with the celebrity-backed trends and that driving wellness forward in some sense. Do you think, as an investor, as an entrepreneur, that there's a responsibility to maybe stay focused on the science-backed research angle of living well? Or is there room for the kind of idea that catches fire, that is more pop culture centered, that is more celebrity focused, that can bring people joy and help them improve their lives, but might not be the kind of hard science? Do you think about, or how do you distinguish between those?
Well, I think, I'm susceptible. Everyone is. We're a celebrity-driven culture to advertising that's not necessarily rooted in science, but is rooted in testimonial, which is what I think you're alluding to. So, for instance, I'm a fan of Tim Ferriss. I've enjoyed his books very much. We follow each other on Twitter. And so when I saw he endorsed Athletic Greens, which is a company I have no affiliation with, it's like a powder of all of your daily leafy greens that you can throw into your smoothie, I went ahead and bought it because I figure, his brand is synonymous with wellness, well-being, and nutrition. And I figured he probably vetted this company before endorsing it. But look, I could be wrong. Maybe he didn't, in which case I'm, part of this culture of, consumers as pawns. I like to think I'm smarter than that. But like I said, I'm susceptible like everybody else. With Trail Mix, with my investor hat on, we have very thorough due diligence, very, very thorough, that helps us weed out fact from fiction. And so in this case, I would just lean on the Parsley Health tagline, which is functional medicine rooted in science.
Right.
We will always, as investors, lean cautiously toward the line of science. And so what, intrigued me about Parsley is that Robin is a data-driven founder. She is not, calling herself a guru or a shaman and leading, kumbaya workshops. She is an MD, and she has clinical proof of the success and how she has treated her patients because of the Parsley method, which she has TM'd. And I find that incredibly exciting. Penicillin wasn't a medicine until a caver who went splunking found it by accident. So medicine is science, and we are discovering new treatments every single day that have the potential to cure the world of hundreds of thousands of ailments. So we shouldn't lean into this industry with an overly skeptical eye, because that will prohibit us from great progress.
Right. And there's almost some risk, whether that's on the part of the founder, whether that's on the part of the consumer, to kind of manage what it is, what we do believe, what we don't believe, what we're willing to buy into. And certainly that's a part of wellness. It's a part of any industry, but certainly a part of wellness. And wrapping up here and just being mindful of your time, I appreciate you joining us, and want to get you out of here on this. Is there anything coming up as we're into the new year, and obviously kind of the work never stops, I'm sure it's endless, but is there anything on the horizon for Trail Mix Ventures that you want us to be aware of, or take a second to chat about?
Oh, sure. Thank you for asking. Trail Mix has a lot of exciting events coming up, and we're trying to be more open to folks who would like to be part of our network, and less prohibited or less exclusive with our ecosystem only consisting of our investors and our founders. So for instance, on February 7th, we're holding a ritual with Jen Tardif of Third Ritual, where we're doing intention setting and goal setting. And for the second time ever, we're opening up this event to folks outside of our immediate network, because we think that in January, you're kind of over inundated with content online in particular, or wellness gurus on Instagram telling you to set intentions versus resolutions for the year and la-di-da. But when February rolls around, people sort of forget about that and fall back down into the over dependence on our work culture in America, which is completely untenable. It's impossible to keep up with now. There's so much communication out there to keep up with. And our lives are digital 24/7. It's easy to burn out by February. So we thought we'd kickstart the year a little bit later this year with this goal setting and intention ritual. And again, this is not typical of a venture capital firm, but it's very authentic to who we are, in that we'd rather sit around a circle with our founders, closing our eyes and meditating on what we hope the year will bring, versus, giving them a Patagonia vest with our logo on it. So we'd love your community to know about this. And if they're curious to learn more about Trail Mix events of this nature, they can sign up for our newsletter, where we tend to publish information about our events. The website is www.trailmix.vc. The subscription is on that homepage, and you can also read our manifesto and see our list of investments. And, we love to hear from you. So just reach out and say hi. The email is hi@trailmix.vc. And tell us you'd like to come to a future event. Tell us that you listened to this episode, and feel free to give me feedback. You talked too much about this. I wish you had talked about that. We listen, and we weave this feedback into our own content strategy.
That's fantastic. And I'll be sure to link everything up and make sure it's easy for everybody to find, and looking forward to keeping an eye on the newsletter and the events and everything you have going on. So just so grateful for your time and the insights that you shared today. Can't wait to get them out to the community.
Well, thank you again for having me. I'm a fan of your newsletter. I'm newly a fan of your podcast. And I think this is great stuff that you're doing to, create awareness in our industry for some really, really interesting new companies coming around the bend. So I'll continue to turn to Fitt for insights that, we of course will give you credit for online when we discover through Fitt. And I'm glad that we did this, and hope to do it again.
Likewise. Thanks so much, Soraya.
Thanks. Take care.